there's hundreds of millions, actually billions of addresses that have ever been active on blockchains, but you probably just care about maybe what a few thousand of them do.
Bitcoin.com news is here in CoinFest Bali with Nansen AI CEO Alex Svanevik. Alex, how are you?
Good, thanks. How are you doing?
Going quite well. I imagine it must be quite a whirlwind visit for you coming into Bali, and you probably are going off to another conference after this.
Yes, have a quick stop back home in Singapore and then off to WebEx in Tokyo after this.
Nice. Well, our team will see you there. I won't be there, but we're actually pushing for a live news desk. It's a new project for us in our media section.
That's cool.
And we'd be glad to have you on the set.
Yeah, happy to join.
So while we're here in Bali, what's been your experience in CoinFest so far?
I think Indonesia is a really interesting crypto market. So someone just told me that there's 21 million crypto users in Indonesia. And that's like bigger than many countries.
Yeah.
Right. So I think that's one interesting thing to me. And I believe Indonesia is in the top 5 of our users on Nansen as well. So I think that's interesting to me. I don't know that much about Indonesia. A good friend of mine is the Gojek founder, Kevin. So I learned a bit about Indonesia through him. But that's been great. I think the venue of the conference is fantastic. That's why I came back from last year. It's really unique, outside, beautiful Balinese surroundings. And yeah, I think Southeast Asia is one of the most exciting regions in the world for crypto and maybe beyond crypto. So it's just good to travel around a bit in the region.
I'm going to zoom out a little bit and just have an introduction for those who are new to crypto for our audience.
Yeah.
In a nutshell, how would you describe what Nansen AI provides to crypto users?
Yeah, so Nansen is kind of like an X-ray vision on the blockchain. So it allows you to see what people are doing in real time. And we built the product for on-chain investors, which means that they can discover new tokens. Mm-hmm. They can perform due diligence to decide, should I invest, should I not invest in this token? Yeah. And they can also track their portfolio across every chain. Bitcoin, Ethereum, Solana, Sui, Aptos, you name it. You can track everything that you have on chain in one place with Nansen. And the next thing we're going to be focusing on is much more AI-centric user experience. And so we have a very cool product launch happening around 1 month from now.
Okay.
Where I'm happy to come back and talk more about that product when it's ready. But essentially that's what we do. We're kind of an X-ray vision on the blockchain.
Perfect. I think that's a really nice analogy. And I wanted to kind of delve into that concept of an X-ray and there being layers to what we're trying to study on chain. So in the Asian context, from what we've experienced, different markets in Asia take their own pace when it comes to adoption and regulation. In your view, being based in Singapore and building what you build, how does this affect investor decisions in different markets in Asia?
Yeah, so I think firstly, the way I view the world, there's a big difference between custodial crypto and non-custodial, right? And the other way to think about this is off-chain and on-chain, maybe, right? And so a lot of the regulations have been focused on custodial and sort of off-chain crypto, which I think is good because that's the part you actually do have to regulate.
Right.
But our focus is more on the self-custodial, non-custodial, on-chain part. And so that's where I think in Asia and in many other countries, that whole area is a little bit more gray.
Okay.
People don't fully understand it that well because it's kind of technical and difficult for regulators to understand. Yeah. Right. And it doesn't quite look like a bank. Mm-hmm. So how do you regulate a DeFi protocol? How do you regulate a self-custodial wallet? This is a little bit more difficult. So, I think to me, that's the most interesting part of crypto. That's what we're focused on chain, right? On chain analytics, seeing what people are doing on chain. But it's also where there's the most uncertainty for builders. Right. So that's kind of how I think about it in a nutshell. I think possibly regulators should take a more lenient approach with self-custodial products. I think they should create maybe sandboxes where people can build DeFi protocols. They can build, non-custodial wallets, and technology and products around that. But it's really, really important to regulate the custodial products for sure.
It does actually look that way in the sense that regulation in Asia tends to affect the builders more than it does the investors.
Yeah. Yeah, that's an interesting way to think about it, which I don't think is a bad approach, actually, right? What I do think is a bad approach to regulation is if you block investors to just participate in stuff, which is kind of the default, and it's a sort of accredited investor scheme kind of does this, right? It makes it hard for people who can't qualify for that to invest in things they believe in sometimes. So my view is it's actually better to try to prevent, fraud and scams at the, supplier side, the builder side, and then let investors do what they want with their own money.
Yeah. And when it comes to investors interacting with Nansen AI, understanding a deeper level of on-chain data to influence profitable decisions, what are some clues that where we're at in the cycle at the moment, we've actually not seen a peak?
Right. Yeah. So one thing that a lot of people look at with Nansen is what we call smart money.
Okay.
So this is, our own proprietary labeling of addresses. Think of this as there's hundreds of millions, actually billions of addresses that have ever been active on blockchains. But you probably just care about maybe what a few thousand of them do, right? The best investors. Yeah. And so we tag addresses as smart money based on their trading performance. So one thing you can look at, what are they doing? So if there's a new launch, let's say the Kanye West token that launched yesterday, what do people do? Do they buy it? Do they flip it? And it seemed pretty obvious that the only smart money addresses that were active on that were quick flips.
I've seen out today that most of those addresses were associated with Libra.
Yes, also. That's not unlikely. I haven't dug into it very closely yet since I've been here. But so I think that's one way to think about it, right? You can see how smart money behaves for a new launch like that. Yeah. And it seems pretty mercenary. And, it seems like there's not a lot of belief in it long term. No investment advice. Who knows? Maybe easy goes up tomorrow. Yeah. We can't tell. Yeah. The other thing I tend to look at is the more sort of macro view of blockchains, where you can look at metrics for different layer ones and layer twos. Okay. So, how many active addresses are there? What's the TVL? How much revenues do the different chains produce? And the interesting thing to me over the last 2-3 years is that it's become much more diversified. Right. It used to be, obviously, like Bitcoin is the first crypto asset and the first blockchain, right? But as you know, a lot of activity in terms of smart contracts and so on moved on to Ethereum. Yeah. That's where obviously that was started and became popularized. But over the last few years, there's been much more activity on other chains, Solana, even Tron, right? Sui, Near, Aptos, etc. Sorry?
Hype as well.
Hype, of course, yeah. Hype has been huge. And it's sort of almost like its own category. It's more like an app chain. Yeah. Feels like a full stack user experience, a great exchange experience. But at the end of the day, there's a layer one running it. So to me, that's been interesting to see just generally that the world is quite multi-chain now. Right. And there's probably room for multiple different chains that serve different purposes and optimize for different things.
Hype came to mind because you were mentioning EVM compatibility at one point. Yeah. And I think what I like to delve into next is, Nansen AI has obviously made some headlines with integrations of the Metis layer 2.
Yes.
As well as with Hyper EVM.
That's right.
To get into specifics, how would you describe these integrations as providing an extra layer of that X-ray ability to investors?
Yeah, I feel like personally as an investor, I don't like to dabble with a chain if I can't see what's happening on it, right? Because it feels like you're in the dark. And one of our early users at Nansen said, before I used Nansen, I was blind, but now I can see. It's a real quote. I'm not making it up, which I thought was just fantastic. And so when we integrate with chains, it's really a way to create transparency in their ecosystems. Mm-hmm. And I feel like if you're not on Nansen, like, are you a real chain? Right? Yeah. I'm a little bit biased, maybe. But so over the years, we've develop tools and capabilities in-house to integrate chains really quickly, right? So the first actually we started with Ethereum, right? And the first non-Ethereum chain we integrated was Polygon, and we spent probably like 2-3 months building it. And today we can integrate an EVM chain literally in a day because we've built such great tooling around it. We've also integrated Bitcoin, right? And we did that only this year, which is kind of crazy. We've run like the company 6 years, and somehow we were able to not have Bitcoin integration, but now we have it, which is fantastic because it means you can see a lot of the big money and the big, flows directly in our product. Even like governments that hold Bitcoin and sometimes are, taking profits or selling too early or whatnot. So integrations with chains has been a big theme for us the last few years and developing capabilities and technology for it. The other thing we've done is we also have started running validators for many chains.
Okay.
And so that means we essentially have a staking business where people can now stake with Nansen if they have Sol, if they have Sui, if they have TRX, they have Hype. We're actually the largest hyperliquid validator besides the foundation. Not that many people know that. And so that's been great because it allows us to kind of support these different chains in a different way. Beyond analytics and integrations, but we also are able to help them literally run the chain. So that's very exciting. And we've essentially 40x'd the staking business in 1 year. So it seems like people like to stake with them.
Of course they do. I mean, on the topic of staking, one project that comes to mind is, I think Revolut partnered with Morpho in France, if I'm not mistaken. And seeing as you're based in one of the world's financial capitals, I'm not trying to jump the gun here, but do you foresee any partnerships in future?
It goes back to what you asked about earlier, which is about, the regulatory environment. And I would love to roll out stablecoin yields for on-chain investors. But it's a little bit hard because you have to navigate what you can and can't do.
Of course.
And of course, the number one thing is to make sure that you are keeping users safe. And the last thing you want is to launch a product where people stake funds and something bad happens and they lose money.
Of course.
That's the last thing you want, not just from a regulatory perspective, because you care about your users. Right? So we have explored this, yes. And Morpho is one of the potential partners that we've spoken with on this topic. And, I would love to see, who knows, maybe later this year, stablecoin staking or stablecoin yields.
I feel like we're not that far away.
Who knows?
So I'm just going to go back to the festival. And I just wanted to ask you, considering all the conversations you've had with other founders, builders in Asia, what's one piece of advice you'd like to share where we're at in the cycle right now?
Yeah, I can answer this question from two perspectives. One as a builder myself, and also as someone who really cares about crypto as a user. And the simple thing is you should build for multiple cycles.
Okay.
Don't be a one cycle founder. It's very easy in crypto to create a project, launch a token, and then get out.
Of course.
Unfortunately, that's kind of how our industry incentivizes builders to some extent. And so I think it's really important, if you care about the mission of what we're trying to do with crypto, which is to build the future of finance and to unlock permissionless innovation, to get rid of the gatekeepers, to have a more transparent and inclusive financial system, to build for multiple cycles. And so that means you shouldn't do things that maybe enrich you, in the short term, because it'll probably come back and bite you in the ass later. And like, probably the thing I've heard the most in my kind of 6 years of running Nansen from other founders is that, man, you're so lucky you didn't launch a token. Because if you think about it, of course, crypto is centered around tokens. You do need tokens, but a lot of the time people launch tokens for not a very good reason, other than maybe their, investors have forced them to, or, they want to get rich quick or whatever. But it's kind of a way to take out debt to your community.
Okay.
A token is like You raise a lot of money, but then you have to deliver on something, right? Token price needs to go up when moon.
Yeah.
Right. And so, of course, launch a token if it makes sense, but just try to think multi-cycle. You're not here just for a year or two. You should be here for the next 10 years or more. Right. And I don't think you can create great revolutionary products if you just think in a single cycle.
Yeah.
You have to think multi-cycle.
There you have it. Builders take note, building for the long term with Nansen AI's Alex Svanevik. Thank you so much, sir.
Thank you.